So, welcome. This is going to be more tailored towards investors. Now, you may be investors from all over the world. This is my hope. This is my expectation. So, you're potentially looking at obviously investing in US markets, the UK markets, possibly emerging markets, European markets, anything that really shows some promise and growth, but also stability. So, this video recording today is really to give all of you a heads up as to kind of a little bit of the rumblings that are happening. And it always pays to be cautious, but obviously not to panic. So I want you to be cautious. I don't want you to panic. So very quickly, when I have a look at the U.S. indices, which is the U.S. is the strongest market in the world by far, by a long way, and of course the GDP being the greatest in the world. California, for example, it's the fourth biggest GDP in the world now, and it's a state in America. That just gives you a sense of the kind of wealth that is contained in the U.S. Now, first of all, we are currently, it would seem, we are enjoying a correction on the monthly period, on the monthly time frame, which is a retracement. So if we go through these, we could see that it appears so far the Dow is leading it. So the Dow is the furthest along on that journey. The S&P is following. Shortly, we've broken through these lows here. So we now have a confirmed downtrend on the daily, which in itself is not significant, but it appears as though we're very close to producing a downtrend on the weekly. So we are heading back towards the moving averages. And for now, look, for the most part, the economy is very strong. The problem with social media, ladies and gentlemen, is that there has been, so there is this kind of always this, the sky is falling content that is out there. I think the problem as well is that sometimes it even comes from good content providers, but they put a spin on it, which creates a sense of panic. And I struggle to do that. I really don't want people to feel that my stuff is about panicking and injecting fear, which I just don't think. I think that's got us to where we are today politically. Why there's so much conflict in the world is because of fear driving people about everything, just fear-driven content. I don't want to do that, so I'm not going to be part of that. So I think there's a difference between being aware of the dangers and panicking, and also just pushing those things to create clicks and to get subscribers and make money. So it seems to me that we are, at this point in time, experiencing a retracement. We've had a really good run. Breathing in and out, those kind of extension and retracement pullbacks is a normal part of market function. And we haven't actually had one for a while. So if anything, the market's been on a really good run lately, and we do need to have a bit of a correction. So instead of, if we had a correction and then a failed attempt to move higher, then I would start to go, okay, maybe we're going to have a bigger correction. But the fact that we're enjoying our very first overdue correction in a while does not mean that things are falling apart. It simply means that that it's happening. It's doing what it's overdue to do. All right, so we can see a little bit here. The NASDAQ is struggling a bit. Obviously, that's one of the indices that has performed the best. I think it's not. I think that you may possibly agree with me on this, that, we know we had the dot-com bubble. We've had bubbles in the past. I do think it's possible there's a bit of an AI bubble. We don't really know what it is yet, but, everyone's pricing in that it has this unlimited value, and I think we're overvaluing it. I think also cryptos are being relied on a little bit too much at the moment. So I think combination, in other words, our sort of inherent integration of unproven technologies into other asset classes is potentially a black swan. So the black swan this time wouldn't be one single thing; it would be a combination of things. So, and I don't really think we're there yet. I'll always be keeping my ear to the ground. If I hear anything alarming, I'll let you know. But what I would highlight here, we are starting to see some exhaustion coming in on the in the tech stocks here in the Nasdaq, and therefore I think a bit of a pullback is probably likely to happen. We also broke through a key level of support there at 21,000. We've got a couple more that we need to test, but I think if we break through these, we'll see our way coming down towards 20,000 is very realistic. Now, the Russell as well, I bring this up because the Russell, has been in a range for a while. It did, I believe, successfully break out of that, but it's encountered resistance at kind of all-time highs or close to all-time highs. National number there, 2,500, meaning to me that the majority of the small caps are not ready yet. In other words, it's just a timing thing. They finally managed to break out, which supports the idea of us being in a nice, strong, healthy bull market. But at the same time, the market in other what's wrong with me? In other indices has been surging ahead, and now all of those are taking a break, and there's a bit of a lag here with regards to the Russell 2000. So Coming back, really one thing to pay attention to here is, does it fall back within this range that we had over here previously, back below these moving averages on the monthly time frame, or does it manage to find support in this area? If it finds support here, that's a very good sign. It means that what we're experiencing now is likely just a shorter term or sort of medium term pullback, and nothing much to be concerned about. So I'm going somewhere with this. I want to have a look at the FTSE. Okay, so one of the things I found interesting about the UK, so in other words, I really do want to know, let's just say that, the US, China has its, China and the US are bumping heads, China and Russia bumping heads. Let's just say that the US is going to, under a new administration, is going to experience some unknown kind of event. There could be another outbreak, another pandemic, and it's not, as we know from the previous administration, they won't potentially handle that very well. So let's just say that there could be some sort of thing that happens over the next few years that causes the US economy to kind of take a real hit. I can see also from a political stance that Europe is especially really wanting to protect itself against Putin and distance itself from any potential allies. I think the UK would be smart to do that as well, to align themselves with democratic states. But again, we're talking politics now, and that's very mercurious kind of area. So what I really want to talk about here is that I hope at the very least that we become independent and have our own growth. And when I say us, I actually mean the UK and Europe together, the Eurozone. The UK has not really experienced it. The FTSE100 has not experienced the same growth that the US indices or even the DAX, for example, has experienced. So generally speaking, when you look at it, it's very, very choppy. It's trending higher, but it's just not the same. So if we just